معرفة.
Bismillahirrahmanirrahim. Now let us discuss about the categories of sukuk. Sukuk can be broadly categorized into 7 types: senior unsecured sukuk, senior secured sukuk, covered sukuk, securitization sukuk, regulatory capital sukuk, hybrid or perpetual sukuk, convertible and exchangeable sukuk. Now let us go a little bit detailed in each one of them, right? Now senior unsecured sukuk are a type of an Islamic financial instrument where investors are exposed to the credit risk of the issuer. Now these sukuk do not have collateral backing, meaning investors do not have direct claims to the underlying assets. Investors rely on the obligor's overall business performance for profit payments and principal repayment. In case of obligor's financial distress or insolvency, investors are treated equally to other senior unsecured creditors under insolvency laws. This is very important to understand that today in the sukuk industry, bulk of the sukuks which are issued can be categorized under the senior unsecured category, meaning to say that if there is a default scenario, and under that default scenario, in the hierarchy of the repayment, the investors will be standing along with the other senior unsecured creditors. Number one, it needs to be very clearly understood. They will not have the claim on the assets of the obligor, right? So they will only have the claim be in line in terms of the hierarchy of the repayment, whatever comes, and they have to stand along with the senior unsecured creditors. So this is very clear, and we'll have to understand this from that perspective. So senior secured sukuk are secured by the assets of the obligor, right? They hold a more senior position in company's capital structure. The sukuk holders are paid first if a company goes bankrupt. This structure reduces the credit risk, making it an attractive investment. Investors benefit from the higher recovery rates in case of default, since the financing are secured by assets. Senior secured sukuk differ significantly from the other sukuk in terms of structure and covenants. Their returns are less correlated with the rest of the sukuk market, making them valuable for portfolio diversification. So what we are trying to explain here is that from the security perspective, there is a particular asset which is backing, right, as a collateral or as a security in the senior secured. So the sukuks are secured with regards to the financing. So this needs to be understood. Now let us understand the covered sukuk, right? So a covered sukuk is a financial instrument comprising a pool of assets such as mortgages, loans, and public sector loans issued by the banks, right? So this is a kind of a covered sukuk. Now, so these sukuk with a soft bullet structure represent a dual recourse arrangement, right, where the underlying pool of assets remains on the issuer's balance sheet, forming a cover pool. This collateral pool provides an added layer of security for the covered sukuk holders. So the covered sukuk, recognized as a cost-effective financing tool for financiers, offer an alternative to the issuance of unsecured debt instruments, contribute to the expansion of their business. So this is a covered sukuk. So as I said, there are not many covered sukuks issued. Bulk of the sukuks are senior unsecured, but there are these possibilities and options with regards to issuing these various kinds of sukuk. So in terms of the issuance of the sukuk, so if we take, for example, as of now, $1 trillion worth of outstanding sukuks. Out of that $1 trillion, there are very few, handful of sukuks which were based on the securitization sukuk. The securitization sukuk is nothing but, from a conventional perspective, the asset-backed securities. Now, as we had earlier discussed, the asset-backed securities at a global level, right, are minimal. So if there is $100 trillion outstanding bond market, out of that only 2.5 trillion were the ABS market. So ABS is a very small market in the conventional space, and even in the Islamic sukuk universe, we have seen ABS to be very minimal. Basically, it relies on the asset transfer arrangements from the originator to a special purpose vehicle, which then issues securities. I am going a little bit deeper into the securitization sukuk. So you will have to understand, securitization of a sukuk is a model or is a structure where the investor are taking a direct performance risk of the underlying assets. So if there are portfolios, right, and these portfolios are different categorized portfolio, and each portfolio performance will actually be transferred to the investors. So this is how the ABS Sukuk works. So asset-backed securities allow issuers to raise cash for financing or investment purposes. The underlying assets are often illiquid and cannot be sold individually, right? The securitization pools these assets, creating a marketable financial instrument for investors. Now, this process also helps issuers offload riskier assets from their books, reducing their credit risk. Now, one of the important feature of the securitization structure of the Sukuk, or ABS Sukuk structure, asset-backed security structure, is that it has tranches. Generally, it has 3 tranches, for example. So they call tranche A, which is like a senior tranche, where the largest pool of ABS is. It is structured to have investor grade rating for investor appeal. Then there's a tranche B, a lower credit quality than tranche A. It offers higher yield to compensate for the increased risk. Then there is a tranche C, then the lowest credit rating, sometimes unsellable due to poor credit. If unsold, the issuer retains it and absorbs the losses. So basically, we have to understand that these are in 3 tranches format. Higher the risk, higher the return. Lower the risk, lower the return. So this is how tranching works. There are some Sharia issues and concerns which are addressed with regards to tranching on the ABS Sukuk structure. So that's the reason why I was saying that the asset-backed security Sukuk structure is not a very common structure for 2-3 reasons. One is, in terms of the global market demand, as an instrument, it doesn't have a huge market demand, because as I said, even in the conventional world, the percentage of the ABS is only 2.5 trillion, whereas the whole market of the bond is almost 100 trillion. So you can see it's very small and minimal. And even from an Islamic perspective, it has not been used extensively. But if at all, some institution, a financial institution which has a portfolio, right, and they want to use that portfolio to raise further liquidity, there are options, and institutions have done it in the past. But there are a lot of things which needs to be addressed from the Sharia perspective, from the legal perspective, before a successful Islamic asset-backed security structure could be structured. The second important point in the asset-backed security structure is with regards to the payment waterfall, right? So in payment waterfall, unlike in other Sukuk, so when we were discussing about the other Sukuk, what happens when the return comes, be it at the periodic level or at maturity level, it is distributed equally with all the investors. But here in the ABS, because there are different levels of investor, you have tranche A investors, you have tranche B investors, and you have tranche C investors. So what will happen in terms of the payment waterfall, the payment goes to the tranche A first, then it goes to the tranche B investors, and then it comes to the tranche C investors. So in case of, for example, default or shortfall of payments during even the periodic payments, there are this risk of the payment not being received by the tranche C, okay, and the payment stops at the higher level. So this is again something which needs to be addressed from a Sharia perspective, and scholars have addressed earlier with regards to the payment waterfall. As we have discussed, asset-backed security or the securitization of the Sukuk structure is possible. In the past they have done it, but because there is not much market demand for it as an instrument, many issuers have not used it. If any issuer wants to use it, there are certain approaches which can be done, and a successful issuance could be structured and issued. Now let us talk about the regulatory capital Sukuk. This is a very important structure. Many Islamic financial institutions have used the structure to raise capital. Why it is called as a regulatory capital? Because there are certain regulatory capital requirements by regulators and the Basel III, which encourages the issuances of this kind of instruments to raise liquidity. The unique feature of this instrument is that it is perpetual in nature, meaning to say, if an Islamic financial institution today wants to raise a tier 1 capital, the liquidity which comes on the balance sheet is for almost like a perpetual liquidity which comes. Of course, they have an option to prepay. At the same time, there are, in terms from investor perspective, also there is some variance with regards to a regular kind of a sukuk structure. Majorly, most of the Islamic financial institutions have used a mudaraba structure, because in this structure what is happening is that the liquidity once from the investors goes to the issuer SPV, and then from there it goes to the obligor. Here in this scenario it's an Islamic financial institution. That liquidity is immediately invested on their balance sheet, and then it is, assets are created, financing is done based on that liquidity. So it's done on mudaraba because there is an actual investment of the liquidity on the balance sheet to create assets, then which returns back the profit, right, from the mudaraba which comes, then it goes back to the investors through a profit sharing mechanism. Generally, a bank's capital structure consists of tier 1 capital and the tier 2 capital, right? So the tier 2 capital are mainly the most of the major sukuk transactions which are issued under the senior unsecured concept. The tier 1 capital are not very common, but still many Islamic financial institutions in the region, in Asia, have used this because there are a lot of benefits in using the tier 1 capital structure for these financial institutions. We will go a little bit detail under the tier 1 capital sukuk structure using the mudaraba and talk about the various important aspects. But now we will just go to the next one, which is a hybrid or a perpetual. So try to understand. So if a financial institution, an Islamic financial institution, raises capital through the tier 1, but if the same thing is done by a corporate, the terminology used by the market or the jargon used is hybrid. So if a corporate uses the structure, meaning to say a perpetual sukuk structure, it is called as a hybrid. And there were some corporates which have used this structure to raise liquidity, and they were quite successful in raising it. There are certain Sharia concerns with regards to the sukuk structure, if it is structured for hybrid. In terms of the volumes of hybrid sukuk issued by corporate in the region, there are not many, but it is again a very unique structure and gives a lot of benefits to the issuers and at the same time to the investors as well. Is that in a perpetual sukuk structure, there is no end date, right? But there is a date every 5 years, which is called as a reset date, for example, where the profit ratios could be reset. The option to close this structure is mostly at the disposal of the issuer or the obligor. So that is one thing which is different. And how the accounting treatment is also done with regards to the liquidity raised, this is also different. It is not a pure debt, it is like behaves more like a quasi equity. So that is also a difference of how the accounting treatment is done when a hybrid is used to raise liquidity by a corporate. Now let us quickly understand about convertible and exchangeable sukuk as well. So this is a type of a sukuk structure in which sukuk certificates have an embedded option giving sukuk holders the right without an obligation to convert the sukuk into real assets, meaning to say the sukuk holders have an option at maturity to convert the sukuk into an equity of the obligor. So that is an exchange. You are exchanging that aspect. So exchange or conversion is typically subject to present condition, example the lockup period after subscription. Exchangeable sukuk are instrumental for investors who seek to protect their position in sukuk against unsecured periodic distributions. And investors can walk away from the sukuk contract by converting their sukuk holdings into real assets currently created or owned by the originator. The conversion ratio depends on the current price of the sukuk. If the sukuk price is less than the underlying asset price, the sukuk holders may choose to convert and vice versa. So the option is at the sukuk holder to either convert or not to convert, or exchange or not to exchange their sukuk on maturity. And convertible and exchangeable sukuk are commercially structured as senior unsecured sukuk. So these sukuk can be converted into equity of the obligor, as I said, or a third party, so they can be exchangeable upon occurrence of pre-agreed trigger events at a pre-agreed conversion ratio. These sukuk are asset based, meaning the Islamic structure justifies the cash flow from an Islamic perspective. But investors have no recourse to the assets underpinning the sukuk. So the assets are used solely to ensure Sharia compliance in the cash flow payable to the investors. Convertible and exchangeable sukuk provide investors with the potential for equity participation, which can be attractive in certain markets conditions. Now let us understand the hierarchy of repayment in case of bankruptcy. This becomes very important because, you see, as an investor, the investor needs to be very clearly told, and the investor needs to be very clear in his or her understanding that what will happen in case of bankruptcy. Because in today's world, most of the sukuks are senior unsecured. So let me explain to you the hierarchy. So the hierarchy is, first there is senior secured, second there is senior unsecured, third it is subordinated debt, fourth it is preferred equity, and fifth it is common equity, right? These are the 5 levels which are followed in case of bankruptcy, and if whatever pool of liquidity has been gathered to pay all of them, this is the waterfall, or this is the way. Whatever comes needs to be paid first to the senior secured, then whatever remains goes to the senior unsecured, then it goes to the subordinated debt, then it goes to the preferred equity, and the fifth is the common equity. Most of the today's investors, if it is a senior unsecured sukuk, are at the level number 2, meaning to say in case of default, they will be number 2 and standing along with the other senior unsecured creditors, okay, to receive the whatever proceeds which are there to be paid. So this needs to be understood as a hierarchy in terms of the repayment.
معرفة.